Something is going on with Bitcoin that's never happened before, and Coinbase is suing the SEC. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin is keeping everyone on their toes when it comes to price trajectory. An optimistic take among some Bitcoin market participants focuses on sweeping range lows to continue the bull run. Adherents place emphasis on an area in the mid-26K zone with a potential to expand past Bitcoin's 200-week moving average at around 25,850. Bitcoin is still acting sideways here, which means that it might be sweeping the low once more and then reverse up. Trader Gel, meanwhile, is one voice believing the worst of the correction is over, adding to spot positions in recent days, saying the higher time frame direction is clear, this is just one of many corrections on the way up. He added, zooming in, we have Bitcoin sitting at a big support cluster, while RSI looks to be building a divergence. He says, enough for me to get long. The artificial intelligence chatbot ChatGPT took the world by storm after its latest release in late November 2022. While initial reactions included much opposition to the technology, it continues to see growing adoption. Crypto exchange and blockchain developer Binance announced that it has integrated ChatGPT into its education platform, Binance Academy. In a blog post on April 24th, the company introduced its new AI-driven tool, which it calls Binance Sensei. The bot uses machine learning to source answers from Binance's educational platform, Binance Academy, to help answer users' questions on various topics in the Web3 space. The new AI-powered mentor has users prompt it with specific questions or keywords from which the sensei should provide a concise, approximately 150-word summary for each user. Binance's new AI-based learning tool is far from the first use case of the technology in the crypto space, with AI even finding a role in bringing more efficiency to the meme coin community. Ethereum staking withdrawals have entered their third round, but Ether staking deposits have almost equaled them according to data from analytics platform Nansen. Ethereum staking withdrawals started ramping up for the third time on April 24th and into April 25th. According to Nansen, the crypto exchange Kraken was responsible for a large portion of these withdrawals. A round refers to the number of days taken to process partial withdrawals and rewards. Nansen says it currently takes just under 4.5 days. The last large batch of withdrawals on April 24th was a total of 61,608 ETH in principal and reward withdrawals. However, at the same time, there's also 63,000 ETH deposits reported by Nansen. This has resulted in zero change in the balance of staked ETH over the past 24 hours. In February, Kraken was forced to halt its Ethereum staking services following enforcement action and a fine by the United States Securities and Exchange Commission, which accused it of selling unregistered securities. As a result, much of the ETH withdrawn early on has been from Kraken wallets as assets get returned to stakers. According to Nansen, 2.3% of total withdrawable ETH remains from Kraken. Nansen currently reports there is a total of 632,000 ETH waiting in the pending withdrawal queue. At current prices, this is valued at around $1.16 billion. Before the last wave of withdrawals commenced, Nansen reported an all-time high in total amount of staked ETH. This figure hit 18,796,000 ETH, valued at around $34.5 billion on April 24th. The concerns over a mass exodus of staked Ether following the Chappelle upgrade have been squashed. Token Unlocks is reporting that a total of 1.66 million ETH has been withdrawn since April 12th, but over 1.07 million ETH has been deposited, signaling there's still quite an appetite for staking Ether. Our partners at Venom, a Layer 1 blockchain that operates out of the Abu Dhabi global market, announced today that its public testnet is officially live. The milestone marks a significant accomplishment in Venom's roadmap as it prepares to launch on mainnet. Along with the testnet launch, Venom has also unveiled a host of in-house developed decentralized applications as part of its growing ecosystem. The testnet design suits both ecosystem users and developers. It enables developers to test and debug dApps and blockchain protocols while allowing users to experience the dApps firsthand. The goal of the program is to encourage innovation and community building within the ecosystem. Developers and users can try out the testnet in two simple steps. First, download the Venom Wall on any mobile or desktop app. And secondly, users can jumpstart their journey of testing the Venom ecosystem by claiming a free testnet allocation. Developers will be able to try their hand at building on the asynchronous Venom blockchain, which boasts ultra-fast speed at 100,000 transactions per second, and a dynamic sharding feature that enhances scalability and network reliability. Venom's network boosts interoperability, making it a viable tool for developers, while its low transaction fees make it user-friendly for global adoption. You can try out the Venom testnet with the link in the description below, and check out our video we made on Venom there as well. If you want to be eligible for a Layer Zero airdrop, here's what you need to know. This article on our website you can also find in the description below to go through it yourself. Layer Zero is an omni-chain interoperability protocol. Layer Zero enables the realization of cross-chain applications with a low-level communication primitive. On top of that, Layer Zero is already an established protocol. Currently, many projects are using its technology to interoperate between blockchains. Some examples include Stargate, Radiant Capital, and Omni BTC. The requirements you'll need are a MetaMask wallet with Binance Chain and Arbitrum 1 added, an Aptos wallet, small amounts of BNB in your MetaMask wallet on Binance, and small amounts of ETH in your MetaMask wallet on Arbitrum 1, as well as around $20 of USDT. This will be used for bridging and buying some Stargate tokens. Do note that performing these tasks does not guarantee an airdrop, but if Layer Zero decides to launch one, you'll be in a great spot to get some free tokens. First off, join Layer Zero's Discord group. Next, it's time to do some cross-chain bridging. Head on over to Liquid Swap. Here you can swap some tokens from BNB chain over to Aptos. To do so, you have to connect your MetaMask and your Aptos wallets. Choose the token and bridge over, and then check the network source and destination are correct. Now it's time to move on over to Stargate. This is a very popular bridging option today. However, it can only be used to bridge between EVM chains. So we're going to use Stargate to transfer between BNB chain and Arbitrum. Similarly, connect your MetaMask wallet, then choose your tokens and respective networks. Input the token amount, and you're all set to go. There's a few more steps to get the best chance of an airdrop, but you can follow along with the article linked down below. For the first time, Bitcoin whales who have been dormant for over 12 years have woken up and are moving Bitcoin. Look On Chain tweets, some Bitcoin whales that have been dormant for many years have woken up recently, and 3 whales with 8,199 Bitcoin or $225 million have woken up in just 5 days. Adam Cochran also writes, unless these wallets are somehow related to Mt. Gox cold storage, then some old wallet generator has to have been cracked. We're now at way too many 10-year-old wallets spring to life on multiple assets all of a sudden. So what does this mean? Are whales about to dump on the entire market? Well, years ago in the early days of Bitcoin, in order to create a Bitcoin wallet, you had to go to a website and it would generate you a wallet and your private keys, which seems kind of wild these days now that we have MetaMask, exchanges, and more. But back then, it wasn't too much of an issue, and that's how a lot of Bitcoin OGs created their wallets. If you remember, a couple weeks back, we mentioned that there was somehow a hack that only old Bitcoin wallets were being drained. And from there, more whales started moving their funds around. To me, it seems like this could be a case where someone may have gotten access to those old websites and somehow were able to gain access to old Bitcoin wallets. Then out of fear of getting drained, whales started moving their funds to other wallets for the first time ever. So I don't think these whales who have seen the peak of $69,000 are about to sell their holdings at $27,000. I think most likely they're moving to newer, safer wallets. This does, however, affect a lot of on-chain data and algorithms that track old Bitcoin wallets, which may have potentially caused a sell-off in the Bitcoin price over the last few days. Cryptocurrency exchange Coinbase took action against the Securities and Exchange Commission late Monday, asking the federal court to compel the agency to respond to its demand for clear crypto regulations.
Well, we're always in conversation with the commission and other agencies that have oversight and interest in crypto. At the same time, we think it's very important that there be a public conversation and a public dialogue as well. It's one of the reasons why for many months now, Coinbase has called for rulemaking that involves the SEC promulgating a proposed rule, inviting comment, not just from the Coinbases of the world, but from others who have an interest in this area.
The exchange sent the SEC its so-called petition for rulemaking last July and asked the regulator to propose and adopt rules for digital asset securities. It also sought answers to 50 specific questions that would provide clarity and certainty regarding the regulatory treatment of digital asset securities. Some of the questions center around the SEC's methodology for classifying certain tokens as securities, while others focus on topics like asset custody and trading crypto asset securities on SEC-regulated exchanges. Under the law, the SEC is required to address Coinbase's petition within a reasonable amount of time. They said that from Coinbase's point of view, a reasonable amount of time has passed after 9 months with no response. The filing says the U.S. does not currently have a functioning market in digital asset securities due to the lack of clear and workable regulatory regime. New rules facilitating the use of digital asset securities would allow for a more efficient and effective allocation of capital in financial markets. But if the SEC's response to Coinbase's petition is to not create new rules, then the company would have the opportunity to challenge the SEC in court. Coinbase's chief legal officer Paul Grewal wrote in a blog post that Coinbase is not asking the court to tell the SEC how to respond. We're simply requesting that the court order the SEC to respond at all, which they are legally obligated to do. The exchange's challenge comes amid a regulatory crackdown in the US, where agencies like the SEC and the Commodities Futures Trading Commission have stepped up their scrutiny of digital asset firms so far this year. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.